Last month, BP, of course, had to write down $17.5 billion, and yesterday Shell up to $22 billion. So good to speak to you then. So what's been happening? Why have we seen these write-downs from these oil companies?
We've seen through the pandemic that oil and gas demand has fallen drastically. And that has made these oil companies reimagine, rethink what long-term prices are going to be. These prices are what they use to value what is on their books already, or to decide what new projects to finance and go ahead with, and what kind of returns they will bring to investors. And with this outlook changed, BP had to cut its long-term oil price from $70 per barrel down to 55, and Shell had to do similar lowering of prices in the short term, and that is what has led to the write-down that you mentioned, which are really large sums.
So we've seen these huge numbers for European oil majors. What does this mean for the U.S. producers?
So we know that European oil companies take climate change much more seriously, and these write-downs also reflect not just a demand shock from the pandemic, but also a long-term impact on how the world, as these oil companies see, are shaping up towards low-carbon fuel sources. U.S. oil companies have been laggards in this case. And what we have in a story we're going to have on Bloomberg Green is that we have major U.S. investors. So the New York State Common Retirement Fund, which manages about $210 billion, told us that without this long-term price assumption, investors cannot assess whether Exxon and Chevron in particular are serious or just paying lip service to the threat of climate change.